you start to think that everyone's the same. You start to think that everyone's investing in multifamily. You start to think, holy crap, new value add deal in Texas and it's 150 units in Austin, blah, blah, blah. I've heard it a million times. That is fine to think that. But looking at the global picture, the market cap for negative interest rate bearing bonds is about $17 trillion. There are $17 trillion worth of money managers out there going, holy crap, Japanese bond, I'll only lose $1% a year. I'll take it. And he says that in a meeting full of 12 intelligent people, and they go, we got to give this guy a raise. So why is
and a bonus?
Yeah, exactly.
Yeah.
So why is that? Because there's an incredible glut of inexpensive capital floating around the world right now. And we start to feel like these 5 caps. Oh no, I used to be 7 caps. No. The reality is there's not an overwhelming glut of great C+ class multifamily deals. There's an overwhelming glut to the tune of trillions of dollars of capital searching for that cash flow. So in terms of it's a bad time to get into multifamily, it's a result of people getting in these echo chambers and seeing that their friend just launched a podcast and is having success because of it, or whatever variation of that. So when I look at the global economic picture, I see a prolonged low interest rate, low cap rate environment. And when you include COVID, you have the potential for a very unique combination of historically low interest rates and increasing cap rates. Now, we haven't seen that much because despite the fact that these naysayers have been harping on rentals not paying the rent, collections data is actually quite high. And because of that, there's not distress. And because of that, we haven't seen significant discounts to market. But believe me, if we do, our firm is going to be well positioned to take advantage of it. Mm-hmm. And if it doesn't happen, we're just going to keep on chugging along. And if we can do 3 or 4 deals a year that we're confident can produce double-digit returns to our investors, that's exactly what we're going to do, because that's the way this game is played. It's a long-term, multi-generational play that works 100% of the time if you don't blow it once.
Okay. No, because I teach people like, you have to do the first deal the right way. Otherwise, you'll never do another deal, because if you blow it once, you're never going to do it again. And, this is strictly an intergenerational game. I mean, we're just talking about how we do this over time. And you're right. And like Harry Dent was saying, I can predict exactly what's going to happen 100 years from now, but I can't tell you what's going to happen tomorrow. And the economists, he says, don't believe a word they say. Those economists, they don't know anything. They sit around and just throw out ideas and see which one sticks. But it's funny you say you're talking about that kind of capital that is just sitting out there losing money, and who can lose it the least. That reminds me of, I was having a conversation with a California investor, and they were telling me that people are buying properties at a 0 cap, and just crazy numbers. And the reason is because it's foreign dollars looking to get out of China, and to park it in the United States because it's safe. It's so much safer in the United States because of our law system, the legal system, and in our property rights system, that they're better off pulling that money out and just parking it there at that high price, because they know they're going to make money over time. They're just going to make money, which is better than what they're doing on the other side.